Let's go to the NGX trading floor. Today, the Lagos Free Zone closed the trading session on the Nigerian Exchange Limited. They marked the flotation of the company's 25 billion naira bond. The closing Gong event was attended by partners to the debt offering, which includes Stanbic IBTC Capital and Infra Credit, and of course, officials of the Nigerian Exchange. Let's take excerpts.
Today's listing was part of the Naira 25 billion Series 2 bond, which we have raised as part of our Naira 50 billion bond program, which was initiated last year. So this entire financing is supportive to our capital structure, which is going to finance the entire development of Lagos Free Zone. So this is the first listing. The first, the Series 1 was a Naira 10 billion fundraise, for which we didn't list, but we felt that it was very important for us to list the Series 2, which was a huge sum of Naira 25 billion at the Nigerian Exchange Limited, to provide liquidity and visibility to all our investors. The NGX is really a deep capital market with so many players participating in it, and we all believe that going forward as well, we will continue to engage with them to help us raise debt as well as equity capital for running our business. Because what we are doing is not a 1 year or a 2 year project. This is a 15 to 20 year kind of development, and we are building it in phases. The total development of the special economic zone is 850 hectares, out of which the first phase is 300 hectares, which includes a deep sea port as well. So Lekki Port, which will be operational this year, which will be the key catalyst for our business, and this is going to really create an upsurge in terms of the offtake for the real estate facilities, land, warehouses, standard factories, residential apartments, commercial offices, which we are building, and creating an entire bouquet of real estate products in Lagos Free Zone. So what we believe is that this is an opportunity for investors to participate in the infrastructure financing space. Infrastructure financing requires long tenured financing, and since we have companies, guarantee companies like Infra Credit, who can actually come in, who understand infrastructure financing, they can come in as a backstop and then provide that credit worthiness required to the investing public, which is basically the pension fund and the institutional investors who have an appetite for long-term paper in this country.
I think the debt capital markets in general supports environmental and social risk structures and initiatives and measures, right, from all its participants. So across various stages in the process of bringing the transaction to market, I think from us as Stanbic IBTC Capital, at the point of Infra Credit as well, and also at the point of the various investors who participated in this transaction, there would have been environmental and social risk assessments done on the zone, and the way the business is sort of governed and the framework in which they use to continuously monitor the impact of their activities on the environment. So I would say that if you look at it from that perspective, yes, the documentation process, the packaging of the instrument process, all of that took into account all sorts of environmental and social risk. In terms of inclusivity, again, at that point, that is why that is where we'll speak to the importance and the strength of the Infra Credit guarantee, because this is a 20-year instrument, and none of us here can see beyond tomorrow, right? To be honest, so when you look at it and you look at a 20-year transaction, for investors to have that comfort and that certainty to be able to put their money in for this development, this very important project, the strength of that guarantee from our colleagues at Infra Credit is ever so important. I think this listing signifies two things, right? Or I'll just touch on two things that it signifies. I think the first is commitment, right? This is a show of commitment on the side of the Lagos Free Zone, a commitment to the debt capital markets, to the investors who are supporting it on this journey, as it shows them that, look, this instrument will be listed on recognizable public exchanges, so that participants, there's liquidity, and people could it gives it a bit of should I say, it adds adds to the credentials of the instrument, and it helps, confidence in anyone who's looking to participate either in the primary market for subsequent issuances or in the secondary market in the instrument. I think the second thing is liquidity, right? Because when it's listed on an exchange, people have the opportunity to sell, buy as their portfolios deem it fit.
In line with InfraCredit's mission to successfully unlock access to long-term local currency infrastructure finance in Nigeria, we provide credit enhancement in the form of guarantees. So we provide the credit protection on the back of our balance sheet in the form of irrevocable, unconditional guarantees of the performance of the underlying issuer. So in this case, you have the underlying issuer, Lagos Free Zone Company, that will run their project successfully next to the Lekki port. But in the event that they ever run into any financial challenge, which we know they will not, you are backed by the irrevocable, unconditional commitment of InfraCredit to pay on behalf of the issuer. And we are a AAA rated institution. We've backed over 110 billion naira in long-term local currency debt instruments issued in the debt capital markets. So we use these guarantees as credit protection, and will continue to do so going forward. Yes, certainly risk can be evaluated, and you have credit rating agencies that are certified in Nigeria that rate the bonds on behalf of the investors. In fact, the Pension Commission requires 2 ratings for every bond that's issued in Nigeria. Now, in this case, we've taken an issuer whose credit rating was in the BBB range, which signifies a bit more risk, and we've brought our full guarantee to bear so that it comes to the investors as a AAA rated instrument. That's basically your gold standard, bringing it up to AAA. If you need other structures, you can look at a partial guarantee that maybe brings up the rating to an A. Maybe we guarantee only the principal but not the interest. All those sort of structures are possible in the future, but for now, certainly you can compare and contrast the risk of bonds by the credit rating, and if it's an InfraCredit guaranteed bond, there's really zero risk because you're doubly protected by both the quality issuer and the InfraCredit guarantee.